Hey traders, this is Blake Morrow with Trader Summit, and I'm like really pleased to bring on our next guest. Some of you remember him, and it's been a while since we've seen him, but let's bring on Nick Givanovic. He's an independent trader, ex-hedge fund manager, also the one of the authors of the um, um, Two Gray Beards podcast. Did I get that right, Nick?
Yes, you have.
All right, it's a
Hi,
bit of a
Blake. How are
title.
you?
It's great to see you, and it's great to have you here, especially on a day like today. It's really busy. And I appreciate you just taking a few minutes to talking about the CPI data that came out. How are you reading this today with this persistently high inflation? And what do you think is going to happen from here? Let's talk about A, the economy, and B, where you think rates might be going.
Okay. Well, yes, it was definitely a strong number. There's no, I've looked at all the components, and there's really nothing that stands out as being weak or that the Fed could take solace from. There is, this inflation is stubbornly high, and I think it'll continue to be stubbornly high, especially given the fact that we've had a 6-7% run up in oil over the course of the past month, which hasn't been passed through yet. So I don't think the inflation picture gets brighter next month. It might do in 2, 3, 4 months' time, but it certainly isn't imminent. And given that we don't have any data on inflation before the next FOMC meeting, I just can't see how the Fed can move. Certainly, I don't think in June, and even later is beginning to be debatable. I don't think they cut 3 times this year. I don't think there's a chance of that. I think 2 is the most we can get. And I'm actually leaning towards they might not do anything till December, if at all, this year.
Last week I talked to Mark Dow from Behavioral Macro, and you
Yeah.
may or may not know him. He said something that was really interesting and it was kind of fascinating. He's like, this is the same conversation we were having last year at the end of the year about, are we going to have 3 cuts? And look where we're at right now. It's like the S&P is 30% higher, but we're still having the same conversation about cuts. So my question to you would be, how do you think the markets are going to take that? I mean, obviously,
Well, let me
go ahead.
let me let me read you something which I posted yesterday to my
Sure.
subscribers, and basically describes what would happen to the markets if it was a hot number, which is what we got.
Yeah.
So first of all, I started saying, well, if the way the market is pricing, it's paying you to go for a hot number, i.e., because it's giving you 2-to-1 reward. But this is what I said would happen if we got a hot number. We go to 2 cuts, and both later than June. So SOFR, U24 and Z24, those are the nearest SOFR contracts, go down at least 15 basis points, and we're down 18 to 20 immediately. Twos trade 7 to 8 basis points higher immediately and go to 490. 498 will be the worst that I can see them for the next couple of weeks. But after that, the yield curve might not flatten much initially because we have the auctions today of the 10s and 30s, but it will do longer term. A lot of steepener positions will need to get unwound. I would stop looking for places personally to put on steepeners for quite a while. I just don't see the point. And then I think what we likely get is an auction above 450, but then the supply will be taken down at 450, and we might range here for a bit. And what happened, the 10s came in at 3 basis points through. We had a 3 basis point tail. That is not good. When the market has a 3 basis point tail, that means that the demand is very light. The dealers are stuck with a lot of paper, and they'll be selling. And now that I concluded, there would be absolutely no incentive for money invested in money market funds earning 5.35 in T-bills to extend duration into the 3 to 5 year area, and the belly of the curve is going to suffer nearly as much as the short end. Equities will be hit, but less so than bonds. I would still be about buy around the 54.40 to 25 area in SPX, which is 51.88, 51.73 in ES. And that's exactly where the market bottomed today. For a bounce, after midday, something like that. And I really don't see any alternative then to equities being piled into from bondholders, i.e. people who own nominal bonds will be selling those and buying equities. Why hold nominal bonds at all in front of the huge Q2 supply of duration that's coming up? And the very, you have to remember that the spread, the term premium that you get for buying 10-year paper, as opposed to just rolling into the money market and hoping that you keep on getting that rate, is at zero. So you're getting no benefit from buying bonds. And as bonds sag because of the supply and the fact they've got nothing built in, that means that they're going to sag against everything, including equities. So I just don't see who is going to take down this huge supply that we have in the next 3 months, unless there is a concession. And that to me means that bonds have to give up another 15 to 20 to 30 basis points to be able to take down that supply. And that weighs on equities as well. So equities, let's say if bonds have AIDS, equities have influenza. So it's going to be a case of equities going down 1 or 2% and equity and bonds doing worse.
Well, so
That's it.
we have tomorrow, we have the 30-year, right? We have a 30-year
Yeah.
auction. And so do you think that just moving forward, take-up still just auctions are going to be pretty poor as far as take-up goes?
Either that or they'll have to have a give up. So today we've got 2.5 points down, over 2.5 points down in the long bond. And that is likely to continue tomorrow. The market is going to continue to bleed. It's going to have bounces, of course,
Sure.
Especially on Middle Eastern news like we've just had a few moments ago. But it all gets sold into because there aren't, you get no margin of safety. There is absolutely no reason for people to give up staying in money market instruments and earning 50, 60, 70 basis points more than they can get by buying 5 years or 10 years or 30 years. Absolutely no reason for them to do that, because if they did, that would mean that they were betting on lower growth and lower inflation, which is not going to happen for quite some time, it seems. So I just don't see that there's any risk reward in buying the 10-year note here or buying the 30-year note here. I'm a much better seller of rallies than I'm a buyer of dips. Today we might have done enough, but in a week's time, if we get a bit of a rally, that rally gets sold. The dealers are long of paper and they're looking for people and places, i.e. prices, to sell. So rallies will be sold in the bonds, I'm absolutely sure.
Well, Nick, I want to say thank you so much for updating us on your views on the bond market. I think that was that for me is going to be a great headline to use, and I really enjoy your work. I know my team that I work with on a day-to-day basis really appreciate what you do out there in the markets.
Right.
So could you tell us as traders, how do traders better follow your work and subscribe to your work?
Well, I run charityhedgefund.com, so you can subscribe there, and every day, nearly every day, I write what I think the markets are going to do and why, and I put out a weekly video as well, which people can watch, which is very cheap, and then they can do it themselves. I give them exactly what I think and why I think it, and if they agree with my logic, they can follow and trade.
Well, Nick, thank you so much for once again taking the time out to spending it with myself and all of us traders here at Trader Summit. And I'm going to look to catch up with you a little bit quicker this next time around, maybe on a day that's not so busy. So thanks again for being with us.
No problem. Thank you, Blake. Very nice to chat to you.
Always is. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.